Hi, you're listening to Stefan Livera Podcast, a show about Bitcoin. Today, for episode 287, Danny Scott and Zakk Lakin of CoinCorner join me to talk about a few things. We're talking about Hoffline wallets, a new type of wallet that is an improvement in certain contexts and under certain trade-offs. We also talk a bit about Lightning adoption as well. This show brought to you by Swan Bitcoin. Swan Bitcoin holds a deep conviction that Bitcoin is the future of money. Swan's aim is to help you maximize your position in this dominant digital monetary network. As a Swan private client, you will have unlimited access to their team's strategic resources and commitment to Bitcoin education. Bitcoin is an asymmetric investment of unparalleled proportions, rapidly becoming the preeminent wealth preservation asset for every individual and institution in the world. An opportunity like this to build and preserve legacy-impacting wealth for your family or company will not likely be seen again in our lifetimes. The Swan private team stands ready to earn the right to walk alongside you on every step of this journey into the future of money. Learn more at swanbitcoin.com/private or email CEO Corey Clipston directly, corey@swanbitcoin.com. Are you looking for some non-KYC peer-to-peer loans? Lend at HODL. HODL is a peer-to-peer Bitcoin-backed lending platform, so you can collateralize your Bitcoin and borrow stable coins. Or on the other hand, you can put up your stable coins and get some interest. So you can earn income on those stable coins, and the average APR is 25%. On the other hand, if you want to collateralize your Bitcoins, you can now borrow against them, and you will still hold one key in the 2 of 3 multi-signature, as HODL. HODL does not hold your funds. So this is a peer-to-peer lending market and enabling lending and borrowing but directly between users. So you set your own terms and put up offers depending on how long you want to borrow or lend and the interest rate. Go to lend.hodlhodl.com. Do you want to get involved in Bitcoin mining? There's a lot of chatter now about the upcoming difficulty adjustment. Compass is an online marketplace, making it easier for everyone to mine Bitcoin and enhance the Bitcoin network's security. So this is not a cloud mining option. You select an ASIC machine and have it sent to a facility that has been vetted by the Compass team. And now everyone can tap into economies of scale, getting access to reasonably priced hardware and cheap industrial power rates. So if you're unsure about how to get started, Compass offer hardware and hosting bundles, eliminating the need for advanced technical knowledge. Go and get started at compassmining.io. Danny and Zakk, welcome to the show.
Hi, Stefan.
Hi, Stefan. Thanks for having us. Great to finally speak to you.
Yeah. So I see you guys are doing some exciting things, and thought it was time to get you boys on for a chat. So let's hear a little bit about you and how you got into. Well, I guess Danny, let's start with you, and let's hear a little bit from you and how you started CoinCorner.
Okay. Yep. I'll jump in. I'll keep this brief. So I kind of got involved in Bitcoin more on a hands-on level, probably about 2012, 2013. Pre that, I'd kind of popped up a few times in the past at a couple of companies I was working for, and we was looking at various competitive advantages, shall we say, and that kind of cropped up a few times as an opportunity. We never went ahead with any of them, and then that was again more management level. Didn't really understand it, didn't know what it was. It was in magic internet money, I guess. It was the feedback I guess we got along the way. But eventually then I spun off with one of our co-founders and we created a software company, and then we pulled ourselves kind of back in towards the Bitcoin about 2012-13, and then we started mining a little bit, and we were mining for a year or so, I think that was, and then we got to a point where obviously the ASICs were difficult to acquire. That became a bit of a arms race to get us the ASICs, but obviously we were on the Isle of Man, which is a little island off England, if people are not sure where that is. It's in between the Irish Sea and between Ireland and the UK.
Awesome.
So we struggled to get anything in terms of the ASICs, and then the electricity costs were increasing due to obviously we needed more ASICs on there, and it wasn't really feasible as a business model for where we were and how we was able to source the ASICs. So we wanted to stay in the Bitcoin world, so we pivoted. We were software developers by trade, so we kind of pivoted to creating CoinCorner, because at the time, again, it was sort of 2014 at that point, the start of 2014, and we got to a point where it was very difficult still to buy Bitcoin, especially in the UK. Obviously, the US, they had Coinbase and the likes there still at that time. But yeah, we struggled to buy Bitcoins, which is why actually we originally started mining rather than buying them, because we couldn't find a decent platform back in the day to buy something on. I was fortunate enough not to end up on the Mt. Gox and the Mt. Gox situation.
Right. Yeah.
I don't know why. I think we just stayed clear of that generally, just because it was a kind of Japanese style site, and we were trying to find a UK one, I think, at the time.
That's interesting, hey, because most people back in those days were on Mt. Gox. Like Mt. Gox pretty much was Bitcoin back then. So it's funny, but I guess people have their different experiences. Hey, so Zakk, let's hear from you as well.
Yeah, so I didn't really know much at all about Bitcoin really until probably about mid 2017. Kind of fresh grad, computer science degree, working in a corporate software development house, and then I had a colleague, Liam, who used to work here at CoinCorner. He kind of reached out and said there's a job going, which piqued my interest. So kind of jumped in there and been down the rabbit hole ever since. Really. Now looking back, because I came in right at the tail end of the block size wars, so I've recently read the book by Jonathan Bier on that. So that was really eye-opening because I arrived at the company towards the tail end of that times, and so I'm fairly new but old, 4 years now at the company.
Yeah, Zakk's our tech lead here as well at the moment.
Yeah,
Very
fully
much.
down the rabbit hole.
Yeah.
Yeah. Cool. So, Danny, let's get into this Hoffline wallet idea. So it seems like such a crazy thing. So I guess maybe you want to set the scene for us. Like, why were you even thinking about this idea? Like, doesn't everyone just use, multisig, or just use, say, one of the well-known custodians, like, say, a BitGo or an Anchorage or one of those?
Yeah, so I guess I'll set the scene a little bit, try and keep it entertaining, because I don't think it's as exciting as sometimes it sounds, does it? So I think we were not to wanting to slag off the likes of Coinbase, but it was Coinbase coincidentally at the time. I think they'd added one of the altcoins the previous night, and me and Zakk came into the office in the morning, and as we do quite often, we're in before everyone else, and we'll sit here chatting about various things that have got happen in the night, or tech issues on sort of Bitcoin itself, core, or whatever that be. And we was going through kind of a bit of a rant about Coinbase and how they've got the funds, they've got the resource, they've got everything at their disposal, and they don't really do too much for the Bitcoin industry. And this was before I think Peter McCormick had convinced Brian Armstrong to start contributing to Bitcoin core developers and things. So it was even before that. So we was kind of like, we were thinking them same thoughts. Why you guys, you've got everything at your disposal and you're doing nothing to help the industry. So we was thinking, they could be doing all sorts of crazy ideas. And obviously one of them that popped up was a hot wallet that is purely offline. The keys are purely offline. So we sort of said, that's obviously a ridiculous idea. We just sort of, you brush it off and leave it. And then we thought, well, why can't we? We've seen cold storage do that with QR codes and that side. So we started talking around them and how that would work. And then we sort of touched on, well, what if we automate the QR codes to just go backwards and forwards between themselves and then communicate in an automated manner? So we had a look around and couldn't really find anything that was doing anything similar. We thought it was a ridiculous idea, and maybe it still is. We'll wait and see. I'll let people judge on that.
Yeah. And maybe, do you want to also set the scene a little bit in terms of what most, because of all the hacks that have gone on in this industry, so many people have lost money, and, as we say, it's a perennial saying, not your keys, not your coins. And so typically, I guess most exchanges would have a smaller hot wallet, and then they'd keep most of their stuff in a cold wallet, right? And that cold wallet is where they might have multi-signature and so on, or they might be using a custodian who is in turn doing some of those more advanced techniques. So I guess, is that kind of a good high level of what most exchanges would be doing at this point?
Yeah, completely.
Yeah, I think so. As an exchange, probably our biggest attack vector would be our hot wallet. So this was more of a taking what the guys in the cold wallet sector are doing, and then with the air-gapped QR codes and trying to solve our problems with mitigating our hot wallet exposure and that kind of thing.
Yeah, it's a different use case almost to what we see, but it's just using the same methods, I guess, along the way to solve different problems, which I think you find there's a lot of different companies that we touched on, BitGo, and there's Fireblocks and the likes that are doing the MPC method, BitGo do the multi-sig method, and there's different ways, but they all obviously still have their issues. There's no perfect solution, and this is also Hoffline is not a perfect solution either. None of the solutions are perfect, and they never will be for the most part, I think. But it's just a different model, effectively trying to solve a different use case, a different problem.
Yeah, that's right. Yeah, and you mentioned, so maybe you want to talk a little bit about what the solution looks like. So for listeners, obviously it's an audio show, but if you wouldn't mind just kind of spelling out for them, what does it actually look like if they were to look at a Hoffline setup?
Yep. So there's effectively how do we explain this?
Two halves, isn't there? There's two halves to it. Each half, one half is the hot wallet, one half is the cold wallet. Each half has a Raspberry Pi, and then alongside it a camera. It's kind of, each one is mirrored. So the hot camera is looking at the cold Raspberry Pi, and the cold camera is looking at the hot Raspberry Pi. And then they communicate back and forth via QR codes in an air-gapped manner. And we put it in a nice, shiny little 3D printed case that 3D printer was running overdrive on.
Yep.
It's like a big 40-hour print.
So yeah, that's
the basic setups.
In a nutshell, I think if you watch the video, we've put a video out on social, so you can probably watch that and see, just to get an idea for yourselves of how that looks and how it works. Kind of looks a bit weird and looks a bit crazy. I think we had a few people touching on, they thought it was just a piece of Lego put together, which coincidentally we actually started with Lego before we did the 3D printing, and we built a case with Lego to hold the pies and the cameras, but it wasn't quite as good as
the 3D printed model.
It's also it's the very first form factor, so we've got, there's several ideas out there how to make it super small, and we don't need to use Raspberry Pis, we can use custom hardware or smaller hardware and smaller screens. So it is the very first incarnation, more of a proof of concept of the crazy idea.
Yeah, it was a little bit of an R&D project, I think, for some of us here in the team, and a big part of it as well. I would like to kind of get the message out there to people as well that doing these things, it's an R&D project. We've put it out there to the community. We've actually had very good feedback so far. We've not really had anything too negative in any respect, but we're hoping part of this also just opens people's eyes up to what, there's still innovation to be done in Bitcoin. There's still things that can be created. There's still problems to solve using things around the Bitcoin industry and the infrastructure. So it's kind of a don't stop innovating and working on Bitcoin. There's lots to do still. So hopefully it helps inspire others to follow and do something as potentially crazy as what this may be.
Right. And so let's talk a little bit about what it might be useful for. So as I understand from what you're saying, it's not necessarily that you're going to replace your cold storage with this Hoffline project, but it might be that you use this as your new hot wallet instead, because maybe this is like a more secure way to have a quote unquote warm wallet, as opposed to just having like a single signature, everything on one computer kind of style.
Yeah, exactly. Yeah, it's kind of a step forward for the hot wallet, where you can now take the keys purely offline into an air-gapped machine, and it's a step forward on the current models that are in place, shall we say, and the security, and it's an advancement in the security aspect of it, as was BitGo with their multi-sig and things like that, compared to just a standard standalone hot wallet on a server, for example. So these things are just step forwards each time and improving each time. So yeah, we wouldn't ever hold our 100% of our cold stored Bitcoins in there. That would still be silly. We'd still operate it treat it like a hot wallet, but it's that additional comfort that the keys are never on a physical machine that is physically online at any point.
Gotcha. And I guess, so then that would theoretically make it harder for somebody to attack. Like, let's say now they would have to physically get there and access to the offline device to try and somehow extract the keys out of there and then run away and somehow, spend it out away. And
yeah, the biggest attack vector is physical, which it is with anything really, but we've even had crazy ideas about how you deal with that. You can put it in vaults, you can have a multi-sig setup, so you have 5 of these around the world. There's so many other ideas building on top of this that could mitigate those.
Someone's cutting you up there. It would allow for the multi-sig piece, so we could have 2 of these setups or 3 of these setups, and you can dot them around the world, and the keys would still be offline. So all 3 keys, for example, there are all required to sign the transaction, but all 3 of them keys are purely offline and never go online at any point. So that, again, is another advancement. It's something that we'll be playing around with as well. So yeah, that reduces the physical attack vector, I guess, from the digital attack vector, should we call it. So the online piece, I know there's a lot of queries about, well, what if somebody compromises the online machine and then displays a QR code that tells them to send 10 Bitcoin to an address that's a hacker's address. Obviously, we've put mitigations in place for things like that. So there's, for example, when a customer goes onto the website, they input their address and their amount. There's should we call it a secret key at the web end, hashes and creates a signature which gets recorded or secondary database. I'm being fairly vague with some of this, just from a security perspective anyway. And we'll call that signature effectively goes into a secondary database. And when the hot wallet, the hot machine pulls down the data to send the transaction, so it'll pull some from the database, it'll pull the signature, for example, from the secondary database. And that signature can then be passed in the QR codes to the offline machine, and the offline machine has the secret key as well. It's only stored there and at the web interface layer. At that point, it can then verify that the request effectively came from the customer from the website. So even if you compromise a piece in the middle, like the online machine, you would still also need to compromise the website at the same time as well. So there's certain mitigations put in place there to effectively reduce, I guess, the success of an attack. So there's multiple machines in multiple locations that have to be compromised to even attempt an attack, shall we say.
I think we've also talked about ideas around, so a lot of these exchanges nowadays work off a whitelisting address system where you have to whitelist a withdrawal address. So you could even have that whitelist is stored on the offline one as well. So if any malicious actor did try and do something, they could only, it's mitigating where they can withdraw the Bitcoins to. So there's loads of mitigations there we've thought of, which we're working on too.
Yeah, fascinating. And so then it's also a process of different technologies in the ecosystem all come in. And, one example could be that we, over the last, say, year or two, we've started to see more attention drawn to this idea of QR code PSBT, right? And before we even had that, we had to have PSBT. And then now, we're starting to see more development in QR codes and this idea of having QR code hardware wallets as well, like even Spectre DIY. I did an episode with Stepan Snijirev about that one. The Foundation guys are doing their device that's a QR, kind of like a QR native device as well. So I guess that's an example of like the technologies kind of building up on what came before.
Yeah, completely. Yeah. I think I'd listened to the
Stepan Snijirev. Yeah.
Stefan, is it Stefan or Stephen?
Stepan,
sorry. Yes. Listen to that one, I think, with the QR. And it's very interesting. And I think he highlights in that as well. It's just a different way. I know Coldcard, for example, they do it with the SD card and it's just a different method. And then I don't think they're actually moving the QR code anymore. They had plans for that, but I think they've scrapped plans for that now. But it's just, again, a different model. And it's a different method. So each one has its own attack vectors, but each one has its pros and its cons. And it's
all about trade-offs, isn't it?
Yeah, it's going to be who finds it useful and who doesn't. Some will, some won't. I think that's hopefully what the Hoffline piece will be as well. It's going to be who finds it useful, who doesn't. Maybe it doesn't fit quite right for for BitGo, for example, because they operate in a different manner, I guess, to the way this is maybe intended to use, because they operate with exchanges as their customers. Whereas this is kind of more like the exchange can use this themselves, take that custody back and not have to outsource it to BitGo, for example. Or another one, which is one we are quite keen to play around with, but haven't actually had the time yet. We will pursue at some point, is the Umbrel nodes, because Umbrel's become a very popular Bitcoin node setup with obviously Lightning built in as well, which is very good. And you could actually have this same setup, your Umbrel node, so that would be effectively your Umbrel node. So your keys for that effectively are stored offline as well to alleviate, I guess, any worries as well. For the most part, people can access their Umbrel node remotely. And if you want to send a Bitcoin transaction, you can do that. And actually, if you then have 2FA effectively, you can have Google Authenticator on your phone, and that same Google Authenticator code is also on the offline device. So when you come to make a transaction remotely, you can do that and input the Google 2FA, and the offline can verify that for you there. So it starts to mean that there's a bit more of security around running your Umbrel node in terms of sending the Bitcoin out and removing them. So it's definitely something that I think, hopefully, as you touched on there, that we've kind of taken some of the QR code pieces from the cold storage side and tried to use them in a solution that we can potentially use. And hopefully then the guys at Umbrel and other people can use what we've built and build on top of that to keep creating better and better products and infrastructure.
Yeah, that's cool. And so then it doesn't necessarily have to be a project for exchanges. It could be that maybe some other small business who wants to roll their own warm wallet, and now they want to take that code and run their own little Hoffline thing. So, that's one example where maybe or maybe another example might be like a Bitcoin Beach, right? It's a community of people and they've got like a community Lightning wallet. Maybe that's like another example there. So I guess there's just ways it can be used in other places, not necessarily an exchange.
Yep.
Yeah, I think we talked about as well, taking it one step further with Lightning, playing around with storing the macaroons on the offline one and that kind of thing. So all that is kind of not in the pipeline, but it's stuff we're thinking about too and interested in pursuing.
Yeah, I need a conversation with Lightning Labs guys again, I think, on around it.
Yeah.
Let's see what we can come up with.
And so that's the other thing as well with a lot of exchanges now. I mean, they are now starting to get Lightning. And so I know you guys have Lightning just recently, right? So that's cool to see. I'm very excited to see that. I love to see, Lightning being adopted by the ecosystem. So is that something you're looking at as well? I mean, you mentioned that you might potentially look at a way to have Hoffline do a Lightning thing. Like, how would that work?
Yeah, we're still very early at the moment. We're not quite sure ourselves.
I think similar to what Zakk said there with the macaroons, and you pass them across in the QR code, so effectively the node is still sat running offline for some extent. I know Lightning Labs have actually got a release coming with LND, is it? I don't know if it's coming soon, which starts to allow you can have a Lightning node and receive Lightning payments offline, where the keys are kept offline, is it? Correct me if I'm wrong, Zakk.
There's talk around that, I think, isn't there?
Which would be an interesting development, which would be good. But there's obviously still the side of it. If you want to send Lightning payments out of your node, that still needs to be online. So then it's how can we maybe find some way there to use this method. I appreciate speed is, I guess, a trade-off for this particular method with the QR codes because it can be slow to transact between the two cameras. So maybe Lightning doesn't quite work with this, but there's an idea out there, and hopefully somebody can spin something off that solves the speed problem, and it can be instant.
And we know the Lightning Labs are definitely pursuing ideas around how to do things more securely and, bringing keys offline and that kind of thing.
Yeah, that's cool. So then maybe what it would look like in the future is you might have a Lightning wallet and then the Hoffline for the kind of bigger than a typical Lightning send, and then like the cold. So you'd have like a multi sort of stage.
Your layers of,
Yeah, completely,
Yeah, that's awesome. So
watch this space.
Yeah, and I'm wondering with that's the other thing. It's it also kind of reminds me of CK Bunker, right? So that's another cold card project, and it's like this idea that you could set up. And I think MyNode has it as one of the options. I can't recall if it's still there now, but I know they had it, and it was kind of this idea that you can roll your own cosigner, right? And so it's sort of a similar idea there that it got integrated into one of the Node projects, and I guess it's kind of like in a similar vein to that.
Yeah, the CK Bunker actually is one we'd missed that one because we were looking around for this. I guess it's hard because we were looking for automated hot wallets with offline keys, which is kind of the problem we was looking to solve. But then there's other people that have built very similar, like you're saying there with the CK Bunker, very similar technology, but it's for a slightly different scenario to what we were looking for. So we never came across that, and that was one that I didn't come across. And there's been a lot of comments on it from people saying, go and look at CK Bunker. It's sort of similar setup. So it's one I do need to go off and look at still. I haven't had the time to look at that, but that sounds interesting.
Yeah, but I think seeing these kind of things integrated with the Node projects is a good thing. It's like letting people take their charge of their own security in a way. They're putting a lot of money. It allows you to expose yourself more on these personal nodes rather than just playing around with Lightning feeding chickens. It can actually turn into something of note.
Yeah, I think with Umbrella as well, it's allowing, obviously it's more people running nodes, more decentralization, and all the good things that come from that. And I think as time goes on as well, we've now got the Umbrella piece where it is very easy to set up and run your own node, and it sits there running, and you don't really there's no maintenance, it just sits there running. But you can use it and interact with it. But I think as time goes on, that obviously with any technology, things adapt, things change. We imagine, as Zakk touched on at the very start, we're talking about actually reducing the Raspberry Pis down just to the little chips and tiny screens, which maybe we can then encompass into a tiny box almost, and that box could be effectively your Umbrella node, but it just sits in the corner of your house, and you can run it and operate everything you need to off that in a secure, trusted manner. So that will eventually come, and I know we see you've got smart TVs, smart fridges and things like that, and eventually there was the Doom. I don't know if you've ever seen what's the meme?
Oh, can it run Doom?
Yeah.
Just try and put the game on any kind of electronic device with a screen.
So it'd be quite interesting one to see can it run Bitcoin and run Bitcoin on any device around the world, and hopefully that's the future where your light bulb is running a Bitcoin node, for example. So that'd be interesting to see.
And I guess that the other thing from CK Bunker is that idea of policy rules. And so just like you were mentioning, Zakk, that you might whitelist certain addresses, or you might say, I'm going to rate limit the withdrawals from this device to say no more than 50 million sats in a 24-hour period. That kind of, you can build these sort of policy rules into the offline device to then rate limit the withdrawals to sort of...
Yeah, exactly. And then those can be changed depending on, like, say, an exchange, depending on their comfortability with how much exposure they want. Like, say, certain volumes can go to like a manual sign-off, and address whitelisting. Mitigation helps at the end of the day, doesn't it?
I mean, we even thought of I think I actually put that in the tweet thread, was the Blockstream satellite and receiving transactions from there, and that means we could run a Bitcoin Core full node on there, which I don't know if somebody will class that as offline at that point, because you've got a satellite kind of connected and pulling in, so maybe that's debatable. But little things like that, it seems crazy, but maybe that's the way innovation is created and how it happens. So we just keep playing and we'll see what else we come up with.
And so it's all about the industry is growing up, professionalizing, maturing. And so there are different, obviously people like you and me and my listeners, we're all more hardcore Bitcoin people. But for the people who aren't like us, they want things like insurance companies to be comfortable with it. They want regulators to be comfortable with it. And maybe these are some of the innovations that help get those people over the line so that they change their minds and say, okay, I'm working in some insurance company, and now that I've seen this new security technique, maybe I'll start to offer insurance or lower the premiums available on it, that kind of aspect?
Yeah, completely. I think insurance is a big one. We've over the years, so obviously we mentioned before, we were founded in 2014, so we've been running since then, and we've pretty much since then spoken to various insurance companies. Banks obviously is a whole different ballgame, and we speak to them all the time. But the insurance companies, we originally there was no chance of insurance. It was just a blank no. Then as time progressed, we've gotten to they'll insure cold storage, but they wouldn't touch hot wallets because they were the big issue. But you had to have they had like a structure that you had to do and follow for the cold storage to actually be insured, and you had to do certain things to make sure it was all insured. And then at that point, it's slowly adapted now to they've become more comfortable with as technology's moved on and the processes for cold storing Bitcoins has moved on and developed. And similar now, we are starting to see insurance companies now starting to insure hot wallets up to certain levels, and they're slowly easing off. And as you say, it's completely correct. As time moves on and technology becomes better, these institutes become more comfortable, and over time that changes. And I think we even had one of the guys in here the morning after the announcement of Hoffline, they went into school to drop the kids off and got stopped in the playground by somebody who actually worked in a bank and was then asking about Hoffline and how it works and everything. So that is a good stepping forwards in the right direction.
So actually, I'm curious then on your view, Danny, what institutions are there that are still blocking and that we need, the industry broadly, the Bitcoin industry needs to evolve a little bit further before that kind of company or institution is okay with us?
I think banks are always the big one. For the most part, the piece that I guess prevents a lot of people around the world being able to gain exposure to Bitcoin. Obviously, the regulators as well, of course, are a sticking point for some countries. We're seeing in the UK already at the minute. I think this week the NatWest announcement, or there's not an announcement, but there's a leak from NatWest that they're going to stop anybody being able to buy Bitcoin from a NatWest account, which is 6 million customers they have, and it's quite a big bank in the UK. So that would be a little bit of a backward step for us, and it's certainly a backward step for them. But that has actually come from it's kind of moved on from they're not comfortable with it or they don't like it and it's used for crime and things like that. But it's actually moved on to something called APP fraud, which is effectively people being scammed by maybe something like a romance scam or something along them lines, where they've been told that they need to pay these people Bitcoin for X, Y, and Z reasons, and they come to an exchange. They might bank at NatWest, for example. They send £10,000 over to CoinCorner. They buy the Bitcoin with us. They send it off to this person who they believe is legitimate and all correct. And then they get scammed out of the £10,000. And it's the old traditional scams that have been around for centuries. It's nothing new. It's just as technology moves along, the scammers find new ways to create these scams effectively and to mask them, should we call it. So the banks at the minute, and the NatWest one in particular, their ban on Bitcoin, or what we think is a ban potentially, is purely because of that. It's not because they don't like Bitcoin and they don't like how it works or anything along them lines. It's purely now because they're just trying to protect the customer in some way. It's still, okay, that's not particularly right, and maybe I don't know how to word that right in my eyes there, because it was just 600 customers that they had been scammed out of money for it, which is obviously a bad thing, and we don't want that happening. But that's 600 customers that had been scammed, and they're detrimenting 6 million. They're stopping 6 million being able to use this thing because of 600 customers. And really, they could put procedures and policies in place within their company to try and handle these people going through the system better. But of course, that costs them more money and more resource and more overhead. So they don't want to do that. The easiest answer is just to ban it and stop it. But I do think, having said that, we've had a lot of pushback from HSBC as an example. One again, sorry, I'm going off on banks.
But I mean, it's a similar thing. I've seen there's different reasons, right? So I know even here in Australia, CBA, Commonwealth Bank of Australia, one of the big banks, for people who don't know, I think they stopped people buying it using credit cards and things like that, but they didn't stop them with sending their own money. But I think they were also wary about the whole romance scams and other scams. But unfortunately for us in this industry, bad things will happen, and then Bitcoin gets blamed. They'll say, "Oh, see, Bitcoin, it was a Bitcoin scam," when it was a romance scam, or it was the typical Nigerian prince scam, or one of those other scams that's out there. So it's a
yeah, exactly that. It really is exactly that. And the UK have done the same. They don't allow the credit cards, or most of them don't allow credit card purchases now, but they'll allow you to send your own money. Whereas NatWest now are just saying they're not going to allow you to send your own money as well, which is kind of Bitcoin solves this angle really.
Yeah.
But HSBC has been an interesting one where they've been blocking. They've not come out with an announcement or anything, but they have been blocking certain customers. It's only certain customers and certain amounts and values, so it's not every customer. One of them, more recent, was a high net worth, and they blocked a conversation with him, and now he's looking to leave HSBC and move to another bank because of that. And he's high net worth, a high value customer to them, and he's looking to leave the bank and move elsewhere. So I think with the likes of NatWest doing that, they're playing a dangerous game there. They may think it's a quick solution to block 6 million people being able to buy Bitcoin through via their bank, but actually how many customers are they going to lose due to that, rather than them spending a little bit of extra resource and manpower to deal with the actual problem, rather than just running away from the problem.
Yeah.
We've even had experience talking to people of so the bank blocks them trying to buy Bitcoin, and they go into the branch, talk to the person for weeks and days saying it's fine, it's clear that it's not a scam, and they still refuse to send the money, which is, at the end of the day, it's that person's money there.
I think one of the things as well as us as an exchange, we're a smaller exchange compared to the likes of Coinbase and Binance and things. So we see the customers that come through, we actually catch a lot of the romance style scams or high yield investment program style scams. We actually catch them on the way through, and we'll do manual checks as well. We actually do spend the time and the effort to catch these to protect the customer. And a lot of the time we have saved people, and once we explain to them, for us, I guess in the industry, we see these scams day in, day out, and we know, if the customer can just tell us, okay, I'm sending the Bitcoin onto this website, we have a quick look at the website, we can tell them within 30 seconds whether that's a scam or not, and then they generally will trust us on that, and then it prevents them sending any money onto it, and either they'll then stay and keep hold of the Bitcoin with us, or they'll request like a refund almost back and withdraw the money back to the bank. So we're doing that as a small company. We're doing that already. The banks could be doing the same thing to protect their customers as well, but they're just not. It's kind of a quick solution is just ban it and ignore it for the time being again. But I think it's all changing, and it's moving the better direction, definitely.
Back to the show after a word for the sponsors of the show. CoinKite.com are the creators of my favorite Bitcoin hardware wallet, the Cold Card. The Cold Card has been specially locked down, so you can think of it as a specialized device designed for holding your Bitcoin private keys and also signing messages when you need to spend. And the Cold Card is really versatile. You can use it as part of a single signature setup or as part of a multi-signature setup with, say, Unchained or Casa. The Cold Card has all sorts of features, like the ability to use it totally air-gapped. You don't have to directly plug it to the computer. So that gives you a lot of possibilities and flexibility there. So go and get yours at CoinKite.com and use the code Livera to get a discount. Unchained Capital are building Bitcoin native financial services on a foundation of multi-signature. So multi-signature, it's often talked about, but a lot of people are not ready to go there yet. So if you're sitting on a single signature hardware wallet setup, well, why don't you think about upgrading to multi-signature? You can remove single points of failure. You can have two hardware wallets and separate those locations so that you have additional security. So Unchained Capital have this vault that you can set it up with no setup or storage fees if you build it on your own. But on the other hand, if you need help, they've got a concierge service. So you can have them ship you two hardware wallets. They'll do calls with you, get you set up your vault, and deposit $1,000 of Bitcoin in your vault. So use the code Livera to get a discount there. Unchained Capital are doing excellent things in this space with open source contributions as well as content. So go to unchained.com and find out more. Have you thought about Bitcoin backups and inheritance? CipherGrid is the new product available for pre-order by CipherSafe.io. This is the best value in the industry. It's a metal seed backup product for your 24 seed words. It's got privacy by default. The two plates are facing each other to hide your seed words. It's stainless steel hardware. You get a tamper-evident seal provided and an automatic center punch provided. You can also lock it with a padlock. So there's lots of ways to help ensure that you or your loved ones can access your Bitcoins if something happens to you, while also giving you some additional points of security and ability to know if it's been tampered with. And like all CipherSafe products, it's made from stainless steel, it's fireproof, rust-proof, and waterproof. So go to CipherSafe.io to order yours and use the code Livera for a discount. Back to the show. One thing that brings up for me is we have these conversations and often we're talking about really technical things, and it's typically conversations with developers or very tech savvy hardcore people who are going to actually go and do the work. And then if you talk to if you go to like a Bitcoin meetup and you're talking to a new coiner or even, just someone on the street, their level of technical knowledge or competence, like they might not even be using a password manager. They might, you try to impress on them the importance, hey, write down these 12 words, write down these 24 words and keep them very safe. Do not show anyone, and they'll lose it, right? And so I'm wondering, where do you guys believe we have to strike that balance of, obviously we want people to be fully self-sovereign, but then how much of that is like we're trying to, do things for people?
I think we're literally having a kind of a similar conversation yesterday, just about money in general and how a lot of the world, certainly I didn't, and I know Danny didn't, when you're growing up, you don't get taught how money works and what fractional reserve banking is and all that kind of thing. So I think it's hard then when you're trying to orange pill someone, for those people to really understand why we're so passionate about it, why we're so insistent on, security, self-sovereignty, that kind of thing. So we usually go at an angle, you teach them how money works, and then they come up, then they work out themselves.
It's better that way if they come up with the idea themselves rather than preaching at somebody. I think kind of when anyone asks me questions, I generally go back with questions back to them rather than answer the questions, to help them think for themselves and come up with the answer themselves rather than me pushing the answer on them, because people don't like to be pushed information on. They like to come up with that solution and answer themselves, and then they think they're a genius and it all works and off they go. So it works much better. I think we found over the years to kind of, as Zakk's saying there, educate them or help push them in the direction of actually go and learn about what money is and how it works and how the economy works at a basic level at least, and that gives them, it kind of opens their eyes into Bitcoin is and how that works, and then they come back with the more interesting questions at that point, and you can have the conversation a bit better with them. And I think it'd be great for everybody to run their own and handle their own node and Bitcoin, but I think the world we live in, it's just not a thing that I don't think we'll ever get. You'll never get 100% of the population of the globe running it and using it, all from their own nodes and their own hardware, software, whatever you want to call that perspective. But so what you end up with is companies maybe like ourselves or Coinbase and the likes, where people will need to go to Coinbase and will need to sign up and buy Bitcoin there and hold the Bitcoin there, and they don't want to have to look after it themselves. People, my saying that I always say in the office, I get a lot of slate for, but people are lazy. And it's just a generalization. There's a great example of the webcam and how the webcam was created, and in laziness drives innovation and creates innovation, and the webcam was created because the guys at, was it Cambridge University, one of the universities, they had a coffee machine or a coffee pot in a different office to where they were working, and they didn't want to get up to go and check when it was ready or when it was empty each time, so they created a webcam to watch it, basically to watch a coffee pot, and they were just too lazy to get up from their desk and walk into the room next to them to see if it needed filling up or either. So it does create innovation, the laziness, but people are lazy and people don't want to have to deal and learn and do these things themselves. So I think unfortunately we will always have some form of custodial services out there that are looking after customer funds, and that also does come with the benefits of nicer, smoother products sometimes and nicer integrations of things. So it's not all downsides. I
think the custodial services are kind of the gateway drug to the rabbit hole, really, for the people that want to go down it, because it is very overwhelming trying to learn all this stuff as a no coiner. If you're learning straight away about private keys and seed words and storing it yourself, the custodial services are like a gateway drug, really. Easy to use website. They're used to using websites, and then once they've got a bit of Bitcoin, they go down the rabbit hole, and if they want to, go and set up their own node and withdraw the coins. And I
think it'll be very different depending on where you are in the world as well. Yeah. I think obviously we've seen the El Salvador piece where 70% of the country there are unbanked, and they don't have the bank account and custodian already, so they're used to effectively having everything themselves. So I assume and imagine they'll quite heavily move down the non-custodial route. I appreciate some of them are using Strike at the minute and things, which is custodial, but there's plenty of Lightning wallets out there now that are non-custodial that they can use, very easy as well, like the likes of Phoenix and Breeze and Moon. Great.
That's cool. And I know you guys have been doing some videos on this as well, because you had some of those videos, and this was even like a year ago or half a year ago, you did those videos where you showed Lightning live between like three people, and you would send, I can't remember how much, maybe $200 between, one A to B to C, just like that. And I think it's so cool because it just shows, because sometimes you'll be having some discussion on Twitter and someone will be like, oh, Lightning doesn't work. And it's like, and then I would go and quote tweet your that video and be like, oi, you can see it right here in like 20 seconds. It moves across A to B to C, just like that. Tell us a little bit about that.
Yeah, I think exactly what you're saying. I love the whole thing when people say, "Well, Lightning doesn't work," and then you show them it working. Or I've even got people to just sit there with me and say, "Download Phoenix Wallet, and I'll send you some now." And it's like then they argue, "Well, it's custodial." I'm like, "No, it's not. It's non-custodial now as well." That and you can there's technology is being developed constantly in the background there. And if you're a year out of date with it, you've lost the race there. So yeah, them videos were kind of trying to educate, do exactly what we're talking about there, try and get people to understand how Lightning works and show it works, and it does work. And we made a point. We did the one there that you're talking about with three of us. I think that was myself, yourself, and Zach. And Matt, was it?
Yeah.
And then we did one where we got, I think there's 12 of us in a circle, and there was all 12 of us stood around in a circle, and we made the point of everybody. We sent it was on like $10, was it? Bitcoin from the very starting, from person 1 all the way around to person 12. And the video was like a minute and 11 seconds long or something. It wasn't particularly long, and it was the same chunk of Lightning Bitcoin that was being passed around through all of these 12 people and the 12 wallets. But we also made a point of using different wallets between each person, so you could see that it was, even if people would say, "Oh, well, using custodial and it's Phoenix to Phoenix to Phoenix," then actually no, we made a point of going from Phoenix to Wallet of Satoshi to Breeze to Eclair to like backgrounds in circles. So it was always leaving effectively a custodian at that point. So it was one of them things just to show Lightning works, and it is out there, it's working, people can use it. The adoption at the minute is still slow and takes time, and that's natural with any technology. That's just the way it happens. But I think especially with the El Salvador thing, that's a real eye-opener for people, and I think we've seen quite a few of them now doing exactly the same sort of videos and paying for coffee with Lightning and things. And it's showing people. The video is so much more powerful sometimes than a lot of words on a screen. Just showing them how it works.
A good example, well, not example, is what makes me laugh is we have regular calls with the Lightning Labs guys. And I remember on the last one, they were asking us, what's going on, any issues? I was like, nah, it just works. It was just... Yeah. Just as simple as that.
So we have periodic calls with them just to touch base, and usually with Ryan and Ryan Gentry and Alex Bosworth. And, sort of going through, and it is literally them conversations. They're kind of like they're looking for problems so they can help improve the product and improve L&D. But we get to a point where it's working fine. We don't have a problem. I think we have one of the things we were looking forward to was Pool for the liquidity side. But then what we actually introduced at the start of this year, we introduced Lightning to our exchange piece of the business. We used to have it on the gateway only, so our merchants could pay, customers could pay the merchants in Lightning. So it was only one-way traffic effectively with that. What we've now got with the exchange going in and out, so we could do deposits and withdrawals for customers, it kind of balances itself out a little bit. So we've not even needed to loop out or
maintenance wise. It's very little from us, which is surprising. It's good.
So effectively the liquidity we have sat there on that Lightning node is just
pretty much balances itself to an extent.
It balances itself out. So it's very little maintenance and upkeep, to be quite honest, to keep it ticking over. So this is what frustrates us when we see other particularly bigger exchanges say, they'll don't have the time and the resource to add Lightning and things, and it's complicated and all this, but they'll add all these altcoins and crack on with them because it makes them money. It's a revenue generating thing for the altcoins, whereas Lightning's a short-term loss, should we call it, for a long-term gain, and they're going with the short-term gain for the long-term loss attitude, I think is the way we see it. But yeah, it's not that complicated. So if you're running a Bitcoin wallet yourself, then it's not that much more difficult to add Lightning in. I think the difficult piece, which I do appreciate from a larger company like Coinbase, I think Kraken have been struggling with that recently, is not Lightning itself as such. It's bringing Lightning into their systems and into their system, which is quite a substantial size system. I think that's the piece that's slowing them all down, from what I can tell. So, which is a good thing. It's a positive thing for Lightning, because it means it's not Lightning that's the issue and the complexity. It's their systems, their internal systems themselves.
Yeah, good point.
So yeah, hopefully more will adopt it as time goes on as well.
And I like that you've kind of got that natural balance going there, operating basically a payment processing Lightning, basically a Lightning payment processor for merchants, and then on the other side, some customers who might want to receive in Lightning. So that's kind of like you're going to receive in from them and spend out to the exchange customers, right? So it's worked so nicely. It just balances itself out, and it's so little maintenance. So I think for some of the big exchanges as well, I appreciate they maybe Kraken, for example, maybe bigger volumes and bigger sizes, and they'll have to run multiple nodes for Lightning nodes. But if once you've got enough liquidity in there and you're comfortable with it, it will probably balance itself out 50-50 for the most part. And
if it doesn't, the services like Pool and Loop, which are now becoming automated services as well, Lightning Labs are doing a good job on getting everything automated. You can set it up and then just let it go.
Yeah, that's cool to see. And so I'm curious then as well. So are there some customers who really do live day to day on Lightning, or is it kind of more like most of the time people are stacking to their, hardware wallet or their multi-sig kind of thing? Because one thing I've been thinking about is like when you like have a Lightning interaction with an exchange, unless you're directly spending it out, it's kind of, maybe it doesn't make sense to kind of receive over Lightning and then flush it out on chain in the Lightning wallet. I mean, maybe you would, but like the channel capacities might not work for that. I'm curious if you have any thoughts on that, or if it's kind of just worked for people anyway.
Yeah, well, I was just going to comment, so I was thinking in my head, I was trying to think of our numbers of percentage-wise of customers doing Lightning. And
yeah, I don't think we don't probably have too many living. I guess our customer base is UK and Europe as well. So for the majority of our customers, they are, as you say, they're buying Bitcoin and withdrawing it to hold themselves, or they're buying it and holding it with us. So there's not many, I would say, that are living off Lightning for some part there. There has been a couple more recent that are we're starting to see Lightning deposits coming in from places, and then they're holding that with us, or they're doing something with that. So there is certainly an uptick at the minute in terms of Lightning usage of customers actually just receiving Lightning payments coming in.
And only using Lightning as well, which is what we like to see. A Lightning only CoinCorner user.
Yeah.
There's nothing on chain, just all Lightning.
The Lightning Maxi.
Yeah.
So we are seeing a little bit of an uptick in them, but they're still small. In terms of, sorry, what was the second question? Was the capacity?
Yeah, so basically, like, would it kind of work with the channel capacities, or I guess, I mean, if you're using these, the Phoenix, Breeze, and Moons of the world, it probably just automatically balances things out and manages over time, right? Once you've done those first few channel opens and closes and things, it kind of just works. But maybe if your first transaction is maybe only 500 sats, then that might get eaten up by channel open. And so there's little complexities there. Maybe they have to start with custodial if they're in a very small amount. But once they've graduated up, then they're ready to go fully, a bit more sovereign, right?
Yeah, I think, definitely it is an issue, should we call it, for the channel balancing. But I think that's, again, one of them things as time moves on, these things change. And what Breeze and Phoenix and the guys have done with, it's not one necessarily method, is it, but with turbo channels and trampoline payments and things, the way they've kind of bundled all them together to make the product of what they've created there as a non-custodial, but you can open channels instantly and start using Lightning instantly. I think I tested one the other day. It was with Phoenix. It might have been come off the back of the conversation with yourself on Twitter, and it was about how you can get somebody to download Phoenix and basically send them a Lightning payment straight away. And then with that payment, I think it was 10,000 sats was maybe the minimum. And I think they took a 3,000 sat fee, which was effectively the channel opening. But they could use it because they use the turbo channel side of things. They could just start using Lightning straight away and instantly. Didn't have to wait for the confirmation for the channel to be created on chain, on the blockchain.
And I think with custodial services like ourselves, I remember when we kind of launched our Lightning, we had a few questions around, is it in a different account? How does it work, in the dashboard? But it's just your Bitcoin in your account, and you can use it either on Lightning or on chain. It's like just one account. There's no need to put it onto Lightning and then do it, which is the benefits of custodial, obviously.
That's the trade-offs. I guess the UX with a custodian like ourselves will be much better for the customer, and that will easier to use for the lazy, should we call it.
They don't even have to think about channels and that kind of thing.
And the ones that then don't want to keep it with a custodian and they want to do it themselves, then they can deal with the channel openings and things, which as we appreciate at the minute, it's still new technology, and there is hiccups or speed bumps that you have to get over to kind of make full use of it, should we say. But it's getting easier and easier, I think, with as I keep mentioning there, the Phoenix guys, the Breeze and Moon, and then obviously the custodial side with ourselves, Bitfinex now, and Strike. Obviously they've quite nailed their UX. I think everyone seems to love it. I've never been able to try the Strike app out myself because we're not US, but everyone seems to love it, which is great.
Yeah, that's cool to see. I'm also curious as well. I mean, we're talking about Lightning. What are your thoughts on the mempool of late? Do you believe that, let's say, SegWit and batching and maybe Lightning use are actually making a real difference now? And actually, is that part of the reason why maybe we're seeing less transaction volume on chain? Or do you think it just kind of balances out over time?
Yeah, it's a hard one to predict, isn't it? Because obviously at the start of the year with the price movements, the mempool didn't empty for 3 or 4 months.
Yeah.
And then now it's emptying all the time. And I think with the likes of, was it blockchain.com recently supported SegWit, and we saw a massive bump in SegWit percentage.
Finally,
yeah.
Now just Taproot ago.
Yeah. So it's a hard one to say what factors are important in that, really, isn't it?
Yeah, I think there's a combination, I think, of a lot of things. I think Lightning, yes, definitely for me, is a contributor to that, and maybe don't know how significant that is at the minute.
Well, the bit refill stuff from the other day was incredible. They managed to save what I think we worked out.
It was two blocks from the day of the transactions. I think it was more than that, actually, because I think they got some of their numbers wrong.
But, so that's direct numbers there on what bit refill are doing.
144 blocks that go generally get mined in the day. One company receiving payments from one country saved 2 blocks of space on that day, on one particular day. So it's like, you can see the scale of that. And actually, if they were all on chain, then that's 2 extra blocks worth of data that was getting piled into the mempool effectively.
And then the fees of all those transactions would have been significantly higher than the Lightning fees.
So without a doubt, we are seeing that, and there is proof now and there's evidence to see that, which is good. But I do think the other side of it as well, which we can't always just talk about the positive side. I guess the negative side of it is maybe that the industry is having a bit of a slowdown. You'll see things if you're looking like Google Trends and people searching for Bitcoin. We see that from customers hitting the website. We had quite a slowdown probably over the last month, maybe.
Yeah.
In terms of registrations, and it's starting to pick back up again at the minute with the recent drop, but not quite at the level it was January, February, March at the start of this year. So I think we as an industry, we see this all the time. You have the spikes and the peaks of interest, and then it dies off for a little bit, and then it comes back round again, and that seems to be the way it goes. So I think with the mempool as well, kind of follows trends with that, really.
And we need obviously layer 2 for that scalability. We all remember, even though I was fairly new to the industry in 2017, the mempool was crazy. When the price went mental.
At a great time.
It was like that was good fun.
The backlog was the biggest it's ever been, and it was chaos, and that was just after the hard fork SegWit 2x stuff. And
then look how far we've come since then. We've managed to, the mempool and the Bitcoin network has processed the same amount and not had that same backlog, and that's due to the likes of SegWit and Lightning adoption and that kind of thing. So we have seen direct impact there. It just takes time, doesn't it?
Yeah, great examples there with Bitrefill on their own taking out 2 blocks. And I know Nicholas from Bitcoin Beach, or from Galoy Money, the people, the team behind Bitcoin Beach's wallet, he mentioned recently that they had a day where they had, I think it was 7,000 transactions, of which only 14, or I think roughly 14, went on chain. So that's massive savings there as well. So it's kind of, we're seeing some real growth there. Although like we're saying, it's still early days, and it's not the only factor. As you said, the industry has its ups and downs and flows based on the price, and that's always a factor there. One other area I was keen to actually touch on, I just thought of this as well, is around Bitcoin Core contributions. I know this is one of those things where some exchanges and Bitcoin companies choose to fund a development organization, but as I understand, you've kind of taken that in-house. Can you tell us a little bit about your experiences there?
Yeah, sure. So what we did with that was I've always been I'm a software developer by trade, so I'm a techie, and I always get actively involved in that side of things. And I've always been, from the early days, I was very much, should we call it a lurker, and I was always paying attention to it, and I was looking at the GitHub and doing things from a distance, should we call it. But I never really got hands-on with it and actually got stuck in. So we got to a point with the tech team here, didn't we? We were discussing it, and we said, well, we want to help contribute to Bitcoin a little bit more. Obviously, we run the exchange, and we obviously are onboarding new customers every day. So, we are contributing our contribution to the industry as a whole is onboarding new Bitcoiners every day. But we wanted to do a little bit more and get involved from the tech side. So we sat down, we had a couple of, we spent a couple of weeks, didn't we? Went through with all our tech team and talked through Jimmy Song's book, Jimmy Song's
Programming Bitcoin.
Programming Bitcoin. And we went through that just to show how that Bitcoin works effectively, to get the tech guys all understanding the mechanics of all the different pieces of it. And then the next step was to try and encourage the guys to look to Bitcoin Core and actually contribute something and get involved. And what we want to do with that was not necessarily get involved at the level of
we're not going in there changing
creating a new taproot versions and things like that. In that
changing the protocol on day one.
The idea was to we ended up writing a couple of tutorials of how to contribute and how to do it, and we wanted to do some contributions to be able to write the articles, to push that out to other people around, to show them it's not as scary as it seems, and the little things like even the reviewers. So it's not just always about writing the code and submitting that, committing that. It's always the reviewers are the ones that we lack, I guess, from the Bitcoin Core contribution side. So even if it was just to encourage people to look over other people's code and review that code, we wanted to try and push the angle and get more and more people involved in it.
I think we saw a bit of a gap missing in documentation there as well, of a few of our tech team, and even probably me and Danny are not that experienced with open source development. It's a whole different environment to standard development. So even the process of using Git and GitHub and pull requests and that kind of thing. So we thought the tutorial we wrote would help people with that. And then we are still in the background, especially myself, still actively trying to contribute just at a trivial level. Got a couple of PRs open and have a look at when I get some spare time.
Nice one. The one that's open at the minute, hopefully we committed soon with it. Which was to help prevent people reusing addresses from.
So one of my PRs is in the GUI. If once an address has been used, it just grays it out and says this address has been used. So quite trivial and simple, but actually quite handy in
what it is. So the idea, I guess, was to be more hands-on and get actively involved and kind of not put the money where our mouth is, but sort of really contribute and be involved in that, rather than just we do as well contribute to funding some of the developers at a smaller scale, not quite the scale that Kraken and Coinbase might be throwing around there, but we do at a smaller level contribute to quite a few of the different core developers as well. So it's not necessarily we're doing that just to avoid contributing to the other guys. We do that as well. But it was kind of, again, another one of the things of trying to help encourage more people and inspire more people to get involved in these things. And the more we can onboard in that manner, the better it becomes for the ecosystem.
I think Bitcoin Core funding, it is very, very important. And then you see these big companies go, and it's kind of, but it does seem like it's the easy way out for them to get the community to like them. I'll just go and pay this grant for a developer for a year, meaning they don't have to do anything directly. Whereas we wanted to get hands on and understand Bitcoin at that level.
It's encouraging, as I keep banging on about. It's encouraging more and more people hopefully to do that. And we have got the tutorials for Windows development side and Mac development side that we released, which kind of talk you through how to do a pull request and how to commit it and how to get your first commit on Bitcoin Core effectively. We're using our examples of what we did to sort of show and highlight the whole process from start to finish. And how it all works and how you even set up the development environment and everything. So again, that was it was fairly good feedback on that, wasn't it? Which was good, and hopefully encourage more to jump in and get involved.
Yeah, for sure. So if you give me those links, I can put those in the show notes for this episode. So that'll be stefanlivera.com/286. And for any other listeners, if you're interested, I've got episodes with developers as well. You might be interested in the John Attack episode, Jonas Schnelly, John Newberry, Steve Lee, various others who've been on the show. So Danny and Zakk, any closing comments for the listeners out there, and where can they find you guys online?
Go on, Danny, shill your Twitter account.
Get this in the office all the time. Mainly for me, Twitter, CoinCorner Danny. Always happy to answer questions, talk generally on there 24/7 anyway.
Same, CoinCorner Zakk, ZAKK, spell it slightly different to everyone else.
Always on there, always active. Closing comments. I'm trying to think of something
inspirational.
I was almost about to steal Jack Mallers' "We Will Die on This Hill" for Bitcoin. But I think generally I'm hoping the likes of Hoffline for me, and what that is very much a research and development project, and what I keep talking about there, wanting to inspire others to jump in and get involved and show people that we're a small company compared to the other guys out there, and we're still able to do these things and come up with these things. So there's no excuses from anybody and anyone there to not jump in and do these things themselves and try these things. You don't even have to be a developer to get on board and do various things within the industry and help the ecosystem and the infrastructure. There's lots and lots of different areas that you can get involved in. Get involved.
Fix the money, fix the world. There we go.
So one of you is stealing Jack Mallers and the other one's stealing off Marty Bent, eh?
We can't come up with our own yet. Give us time.
They've got that in influencer training. Don't worry, you guys. But thanks very much for joining me, guys.
Thank you very much, Stefan. Really appreciate it.
So I hope you're enjoying the show. Make sure you share the show with your new coiner family and friends so they can learn about Bitcoin. You can find me online at Stefan Livera on Twitter, and my DMs are open if you've got questions as well. Thanks for listening, and I will see you in the Citadels.